Hi, good afternoon everyone. My name is Ram Dhamija. Welcome to my channel. I'm making a video after many days. I was on leave, so I could not really make a video. So today is 6th of May and today is the Sensex expiry. And there's been lots of things that are happening right now in the markets. And even within the way the markets are reacting, that is also changing. Within April and May, I can see a lot of difference between how the markets are reacting to various news and how the options are playing out, how the premiums are. So it market is always dynamic and it keeps on changing, and the changes are kind of visible right now. Now we will have to see where these changes actually lead us and what are they pointing towards in the days and the weeks to come. So I will take you through my analysis of how I see the markets and what is in store for all of us. So today, as I said, was the Sensex expiry, and it has been a very calm expiry. So there's not much to talk about that. But the interesting thing is happening in the Nifty. The way Nifty is behaving is very interesting. We made a low on 7th of April, okay, which was at about 21,700. And I had been saying that there were two key levels that we needed to cross. First was 23,700 and the next one was 24,200. Now we have crossed both these levels, okay, and there was resistance seen at 24,200, so where we spent about a week or so, and now we have kind of cleared it. So that is a good sign. So what was happening in Nifty was that Nifty was making lower lows and lower highs all along, and finally the bottom, you can say the capitulation bottom, was made on 7th. Usually such moves are indicative of trend reversals, and that is what I had also kind of theorized, that it could be a trend reversal day. And but the confirmation is of course needed, and the confirmation kind of came only after we have crossed these two key levels. Now it is not to say that Nifty can't go down, but I would not change my view of Nifty being into a bearish scenario unless the last low is broken. So we might spend some time in between 21,700 and 24,900, also 25,000 on the higher side. We might spend some time. It's quite possible that we might see some corrections, etc., going ahead. But I would be very surprised if we break this low now, which is of 21,700. And if you remember, this was the time when there was maximum bearishness in the market on all parameters. US tariffs were announced, and our currency was weakening, and all sorts of things were happening. Geopolitical tensions were there, and so on and so forth. Gold was rising heavily, but from there everything kind of eased out. FIS were selling at this point in time, so everything kind of eased out, and we have now come to a level which is quite decent. So even in Nifty, we are up both on month basis and a year-on-year basis as well. Over here, Nifty had actually gone into negative on a year-on-year basis. So that's a good sign. And let's see how things unfold going ahead into the weeks going ahead. Now let us see how the sectoral performance of Nifty is right now from the 52-week high. This will basically show the strength of the various sectors. As I had mentioned, three sectors, FinNifty, Nifty Bank and Private Bank, had already crossed their 52-week high. So I haven't put there how much they are down from their 52-week high, because they had already made a new all-time high. But look at the other sectors. Nifty 50 is down -7% only. So even though we might think, that this is a big correction going on and so on and so forth, I wouldn't be surprised, let's say there are other factors like geopolitical tension, etc. If they ease out, then 7% move is not, it can happen in a couple of months and we could be looking at a new high. So Nifty is just 7% down from the all-time high. Infrastructure surprisingly has come back. It's now less than 10%. Pharma is less than 10%. Nifty mid-cap is only 11% down from its all-time high. FMCG -14, Nifty next -18. Small cap is around -18. So small cap has taken a hit in this particular correction. It had gone to almost -28%. So it's corrected about, it's reclaimed about 10% from there. And PSE, public sector enterprise, public sector banks, etc., and IT. Now these are the weak sectors in this particular bull market. They are, or in this particular recovery, I would say, they are the laggards, and it's clearly showing. Also, momentum is finished. Momentum you will only see once the bull market resumes. Same is the case with alpha, which is a subset of a momentum kind of a strategy. Both these are kind of reeling, and they are still down minus 25% from the top. So clearly, this particular leg of rally has been the one which has been for large caps, which has been for financials, banking, that to private banks, and not for small caps or momentum names and so on and so forth. That's clearly visible. Now coming to how today was, as I was saying, that today was absolutely a cakewalk day for Sensex. So this is basically the straddle prices for Sensex. It did not open too much. It opened at only 245, but been a clean linear decay. So that is one change that I was telling you about options that I have noticed between this month and last month, was that last month, perhaps because Nifty was on such a huge tear, it from 21,700 all the way to 24,000. It was a huge journey that Nifty undertook last month. So maybe because of that, the option decay was not uniform. There were a lot of stop losses that were getting hit. But come May, I've seen this difference, that there is a smooth decay in options that is happening, and the option prices are, even though the premiums have reduced, but the option prices are behaving very, very well. So that's one change that I have noticed, and it's quite a welcome change, I would say. uh, and that is reflective of the straddle premiums also. Now if you look at, this is a very interesting chart. This is the Nifty straddle premium chart. Now we opened at about 174, and right now we are at about 150 odd. Now 150 straddle premium is not too much for 2DTE, and especially when we have a Fed meeting coming up. So Fed meeting is today and tomorrow. So the results will be known by Thursday. I think it's going to be a non-event. But typically before a Fed meeting, the premiums are slightly elevated. This time they are not. So 150 points for 2 days, including overnight and so on, is less in my opinion. So let's see how the expiry plays out. So not too much premium, but then the movement is also very, very restricted, which is actually good for us. Now this is how the markets have behaved today. If you look at VIX, has been constantly climbing up. So we are at about 18.7 VIX, and these kind of premiums are not justifying the VIX that we are seeing. Now VIX is for monthly options, but it is steadily rising up. Now we will have to see what exactly does that mean, and what the implications of that are. The other sectors which did okay today was auto and FMCG. They were kind of flat. IT was slightly down, but the stress was seen in banking names today. Banking was down minus 1%. Mid cap was down, and small cap was down minus 2%. So along with energy and public sector enterprises. So these were the sectors that did not do very well today. Coming to the heat maps, if you see how the movement has been for the large caps today, the Nifty 50 stocks. So the Nifty 50, there were some declines. For example, Coal India was down minus 2%, and Zomato was down minus 3%. Trent was down minus 2%. Adani Enterprise was down minus 4%. Bharti was up plus 1.7%. In terms of Nifty next, over here the cuts are much deeper. So Indigo was down minus 4%, Canara Bank minus 5%, REC minus 4%, PNB. So all the public sector enterprise banking stocks, public sector enterprise stocks are all down between 3 to 4%. Tata Motors was down minus 4% and so on. United Spirits was the one that was up. In terms of Nifty 500, a lot of these capital market plays were down today. In fact, this Bank of Baroda is down minus 10%. I'm not sure why. So if you look at names like HDFC, AMC, ICICI, and CAMS, and all of them were down today. So capital market is kind of taking it on the chin. Bank of India was down minus 6%. Even the realty names like Lodha, etc., were down today. Uh, Now coming to how the international cues are stacked up, and what can we make out of that for our markets. Now if you look at the international cues, the S&P VIX is now coming to about, it was about 22 yesterday. Now it's gone up to 24, but that is not significant. What I would say is that this is kind of a decent range because it has gone to about 40. So from 40, VIX has cooled down. A lot of it has got to do with Trump tariffs cooling off, and There have been reconciliatory notes coming in. So S&P VIX is a good indicator. It's cooling down, which is good for the global markets. US 10 years is fine at 4.3. It is behaving, but the real play is actually happening somewhere else. If you look at Brent crude, it's down to almost 60. It had almost gone to 80 about a couple of months back. So from there it has just collapsed. So it's down almost at 60, which is very good news for Indian markets. Uh, Another important thing that is happening is in gold. Now gold had corrected. Okay, gold had corrected. I will take you through the gold chart. Yeah, this is the crude chart. The gold had corrected, and it was a good time to buy gold. Right now, I don't know how many of you actually bought gold during that point in time. So the last, if you see 1 week or a month, let me put, yeah, so you can see the correction over here. Even in INR terms, gold had gone down. So it had made a peak of about $3,500 dollars, and it went to about $3,200. Now gold, if it corrects anytime between 5 to 10%, it's a good time to buy, and that is what I had suggested to all my clients also, that if gold is not part of your allocation, then wait for the correction. But when the correction comes, you have to buy, right? So gold had corrected almost 6% from the top, not only 5, it had gone to almost 6% from the top. So anyone who bought it would again be in the money, because gold has rebounded very sharply today. So I've been maintaining that it should be part of your allocation, and that will help you in tough times. When equities are going down, when the other asset classes are not performing, then gold comes to the rescue. And that's what I had suggested to my clients. And that just reminds me that if anyone is interested in making their mutual fund portfolio, they can fill up the Google sheet below, and I shall contact them for making a very good robust portfolio of mutual funds, which will help you in maintaining proper asset allocations across various sectors, across various instruments, things which typically a lot of people will tend to ignore. So I've seen a lot of biases in terms of mutual fund portfolio construction, wherein people are invested very heavily in a particular sector and so on and so forth. So if you need guidance on that front, and it's all free of cost, if you want your mutual fund portfolio getting constructed, please fill up that form and I shall get in touch with you. Now coming to what the other cues are. So that is about gold. Gold is rebounding, and which is indicative that gold is still in a bull run. The dollar index is at 99, which is great, and our currency is behaving well. So our currency is at 84.45. It was at 88 some months back. Couple of months back, it had touched 88. From there, it has been a sharp decline, and in terms of US dollar for our currency, and also our markets have rallied. So this is how outperformance comes in into someone who was invested in India, wherein the currency has appreciated and our markets have gone up, whereas US, the currency is depreciated and the markets have also gone down. So that is why it is very, very important to be well diversified, not only internationally, but in our equities and gold and so on and so forth. So you are able to balance everything. You are able to balance all the sharp moves as well. So also, this could be part of, we have seen that FIs have started to buy again. This could also be a part of couple of things. One, dollar weakening, and secondly, a rupee appreciating. So it immediately kind of creates a flow of FIs into emerging markets. A dollar index which is weak immediately kind of helps in terms of flows to the emerging markets, and that is what we are seeing. So that is one good thing that has happened. Now coming to the open interest for Nifty. The open interest is at 0.76, so it's kind of weak right now, and that is what we saw also today, that there was some pressure in Nifty. But having said that, there is something which is troubling the markets, which is the geopolitical tension on our borders. Let us see how that plays out, because if it is a long drawn affair, and if things escalate, then there is going to be an impact on the market for sure. So I think our markets is slightly jittery on that count, and my sense is if the border issue is resolved, then we might see all-time highs also coming into the market. You just don't know, because 7% of Nifty can be taken out anytime. But having said that, we have to be careful of if things escalate, then markets are going to react, and you should be well diversified, and you should be very careful with your positions. Never take unhedged positions overnight, especially puts. Have your stop losses in the system, even during intraday. So that is going to play an important role. Basically, safety first in terms of, especially for traders, I would say. For investors, if the markets tank, then sometimes it presents buying opportunities as well, provided you know what you want to buy and how much you want to buy and so on. So next few days, few weeks are going to be critical from that aspect. Let us see how things play out. And in terms of the open interest for this week, Nifty is slightly bearish, but I've seen open interest change in, within every day. Open interest will change, so it's very difficult to take a call basis one day's open interest. 0.76 can become 1.05 tomorrow. There can suddenly be huge put additions and market continues its way up. So we just don't know right now. I'm just suggesting that US futures are also down. They're down -1%. Maybe it's a factor of that. And also the Fed meeting is there, so we'll have to see what the outcome of that Fed meeting is, though it is expected that not much will happen in the Fed meeting also. They are going to maintain status quo. So that's it from me now for today, and let's see how things go. I hope you are having a good good month. The portfolios are doing well, so I hope your portfolios are as well doing well. For traders also, I hope that a lot of decay etc are happening in options, so they are also doing all right. And I shall see you soon with another update, most probably on Thursday. If you like my content, please do subscribe to my channel. Please share the content with your friends, and I shall see you soon. Thank you for watching. Bye bye.